Tesla up 20%. Is the tech route over? Is the bond route over? And what's the final one?
Afterpay.
Afterpay is Afterpay over and out. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Can you believe it? 20% up. 20. I wrote a story on the weekend, and up it goes 20%.
So you think you're a guru because you called the bottom of Tesla up 20%?
Got lucky.
Look, yeah, big bounce last night, Peter. But look, we'll get markets never go one direction, and I think we're just seeing the pullback in tech stocks is for good reason. It's not just about the bond market. We'll come to a sec, but it's really just as much a rotation story. It's about a growth story, and the tech sector itself has done a lot better in the stay-at-home environment as normalcy returns. Other parts of the market are going to do better. So that's really what it's about. I mean, the tech market just got ahead of itself. Yeah,
but 20% in one night, that is just crazy stuff, Paul, isn't it?
It is crazy stuff. Tesla is a crazy company, right? Yeah. And the trouble is, not the trouble with Tesla, the short sellers got absolutely massacred on Tesla for years and years, and no one will touch it these days. So on very light volume, Tesla, which is number 4th or 5th biggest company by market cap in the world, can go up 20%. It's no crazy the 20% rise last night than the fall back from $850 to about $550 in a space of a week or two.
Yeah, but it's the Reddit guys too. They're in there having a go as well, aren't they?
Well, they are. GameStop up another 50%. It's up over 100% in a week. So look, we're seeing this, Peter. But look, I think there are some bargains in tech locally, but you've got to be careful, and the quality will come to the cream will rise to the top, as they always say.
Okay, but it is a good old story, Paul. When you buy good companies when they've been smashed, it does work. Whether Tesla's a good company or not, it's in the right space. Electric vehicles are the way of the future, aren't they?
Look, they are. I'm just worried that everyone else is going to invest in EVs. Well, they are already. But,
General Motors, Ford, all the Toyota, they're all getting into it. It's a really interesting story. Let's go to the next one. Last week, we were all panicking about the bond market hurting the stock market. Is this rout in the bond market over?
Look, I don't think it's finished, Peter, but let's just put a couple of things in perspective. Last night, the US auctioned, let's put the inflation story into perspective a little bit. Last night, the US Treasury auctioned $58 billion, that's US dollars, of 3-year bonds. They went at a top rate of 0.335%. So really,
people actually bought those bonds at that rate?
At that rate. So really, they're not really expecting interest rates in the US to go up in any time soon. Yeah. However, it is a supply and demand situation. The US government is borrowing like crazy. This is bond issuing week. So tonight we've got $38 billion worth of 10-year notes, 10-year bonds being auctioned, and tomorrow, Thursday night US time, another $24 billion. $120 billion alone this week being borrowed. That's just a fraction of the program that needs to be done. It's about supply and demand as much as anything, Peter. Yeah. The US government is spending like there's no tomorrow.
So the money comes in for the bonds and then goes out with these $1,400 checks and all that sort of stuff.
That's what's happening in the States. We're seeing to some extent the same here. I mean, obviously, the market is starting to worry about the supply and demand, obviously worrying that the US economy grows strongly, we had higher commodity prices, then that could provide some inflationary pressures. But by and large, it's a supply and demand picture. Right. It always has been, Peter. It always will be. And some of the other stuff is just excuse making. And I think the market's right to worry a little about the bond market, but it's just a bit of an excuse for, I think, other things.
And you've got to remember, the American economy shrunk like nobody's business last year, and they're tipping a 7% gain, but it still would just probably bring them back to where they were before it all started. So it is kind of jumping the gun on this inflation.
Well, that's right. And as you keep pointing out, share price is modally about growth. If the economy grows stronger, that's got to be good for the market. So, look, let's put the bond market just to...
Put it to bed.
Put it to one side,
Okay, let's go to another big story, and there's Afterpay. It's come from, from 150 down to under 100 yesterday, wasn't it, Paul? But we also hear that PayPal is gunning for Afterpay.
Yeah, and I think, look, the whole buy now, pay later sector has been the most overvalued sector. Now, I have to put a disclosure here, folks. I have been wrong about this very badly wrong. Yeah. So I'm going to be wrong again. Yeah. But look, I think the PayPal move is significant. And the issue with the buy now, pay later sector has, in my opinion, has never been about the so-called credit checks. It's always been about the margin that they charge the merchant. It's about 4%. So if you buy a consumer, you buy a $100 good at a merchant, Afterpay takes $4 as margin, right?
Off the merchant.
That's a big inroad into the merchant's profit. And of course, the whole competition as people like PayPal come into it, they're going to
Push that margin down.
push the margin down. The profitability will be a lot less in this sector, right?
It'll still do well, but it won't do as well.
Yeah, so Afterpay and Zip and the others, to their credit, got onto this earlier, right? They're the market leaders with Klarna, but the thing is going to be competed out. So I've always been a bit worried about these sort of valuations. At some stage, competition is going to erode the profitability.
But what we have to do is work out what is the right price, and we'll probably find the right prices around somewhere between $70 and $89.
And I'll stick my neck out again. $100 is still far too expensive. This is the most expensive sector in the world, almost, right? But it doesn't mean there's not a good company. But
the interesting thing is that PayPal, and this is what these companies argue, PayPal will actually help market the whole buy now, pay later market. It's really small in America, bigger in Australia, so it's going to grow. So in the end, Afterpay might creep back to 150, but it will take time. It'll be as the market grows, and they're all doing well in this market, we'll see that. But you're right, Paul, in the short term, I think the share prices of companies like Afterpay and Zip are challenged. I hope Zip is less challenged because I like Zip and I tip Zip. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.